Hi, I'm CK at CK Education with today's advice for life. Today I want to start a series. I haven't made a YouTube video in about, I think, maybe 3 weeks or so. I've been pretty busy. At certain times of the year, I'm a little bit busier than other times because of my students that I teach. But I wanted to start a new series. And this series is really interesting to me. Now, I just make videos that are very interesting to me, things that I'm really interested in, things that I've learned and impacted my life. And there have been several individuals, authors, and most of these people, of course, I've never met in my life. I mean, they're just people's books I've read and their philosophies I've that have influenced me. Some people that I'll just call them by their first names have impacted me greatly, that I've known personally. But for the most part, for the next several videos, I wanted to focus on some of the authors and some of the people who have had a great impact in the way I think and the things that I've learned that have become so important in my life. And some of these are just, some of these may seem random to you, but they were very essential in helping me to think the way I think today and helping me learn skills. And some things have to do with my engineering career, some things have to do with just my philosophy on money, some of it may have to do with spirituality, whatever it is, but just wanted to share those. So today I wanted to do this first one, and this one is about John Bogle. And some of you may have heard of him. Some of you may think I've never heard of such a name. You could Google him, and but I mean John Bogle, Bogle. It's not so much that I've read a lot of his books. It's just that his philosophy on investing in the stock market was so different from what I had assumed or what I was used to. I did a lot of investing in my 20s and maybe early 30s in the stock market. I've done all kinds of investing in the stock market. In fact, when I was, I think around 20, I'm trying to remember, I think when I was around 20, 23, maybe 25 or so, something like that. My dad gave me $3,000. My dad is not and was not a wealthy man. He didn't have a lot of money, but it was sort of a surprise to me. He gave me $3,000 and said, I don't know anything about the stock market and anything, but he says, you were born here and you're educated here, so why don't you go learn about the stock market and see what it is, and here's $3,000 and you can go invest this money. Now, part of me was really excited, and part of me, I was sort of like, it scared the crap out of me because I knew my dad didn't have a lot of money, and $3,000. I mean, that's kind of big money. This is back in the 90s, so I didn't want to lose it. This was my dad's money. I didn't want to lose the money. So, but I took it, and I decided, well, I don't even know the first thing about it. I really didn't know anything about it either. So. The first thing I did was, of course, I created an account, and it was like Ameritrade or something, or E-Trade, something. I created an online account so that I could trade stocks, and then I started reading up on some things, but and at the same time, I invested in a few stocks and so forth. And so over the years, I bought individual stocks. I've done IPOs, initial public offerings. I bought real estate investment trusts. I bought, index funds like the S&P 500 or the Wilshire, 2000 index, worldwide index fund, and things that mimic the indexes like ETFs. And I've also invested in, like technology stocks or in the Dow or what else have I done? I've done day trading. Yeah, I even tried day trading. I even tried penny trading, buying these penny stocks that are worth like less than $1, and you try to ride and you try to make money based on the fluctuations and so forth. So I tried, short-term investing. I tried long-term investing. And then when I started working in companies, corporations, and they have 401k programs. And so, of course, I invested in some of the different funds and so forth. And so I've done a lot of, that kind of stuff. And I'm just saying all that to say that I have some experience in doing this. And I did that for probably like 15 years. I've done a lot of, and, 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 and right now, let me just say, I do not have any money in stocks. I don't trade in the stock market. I don't invest in the stock market, and there's reasons why. The simple conclusion is, after doing a lot of activity in the markets, this is just my own personal thing, but I just came to the conclusion that I didn't want to invest in something that I could not control, and the stock market is something I cannot control. And let me talk a little bit more deeply about this, but. So John Bogle, when I first got started, I didn't know anything. I just started this and this, and I lost some money and made some money. Eventually, I made back the money that I lost, and I gave the 3,000 back to my dad. And I was like, all right, I'm done with this. If I do invest in the future, I'll do it with my own money. So I don't want to, but it was a great learning experience for me. Okay. And then, after that, in for the next 10 years or so, I did invest, with my own money, and for the most part, it was successful. I bought and I held, and I heard, and I've learned that those are some of the most successful transactions that I had, were looking at certain companies that I thought were really solid, and then buying them at a relatively low price, and just holding on to them until their prices went up. So I think two of the examples that stand out in my mind, I think I bought Starbucks and Toyota back in, this was late 90s or something, or early 2000s. And then I bought it for, I don't know exactly what the price, this has been a long time, but I held on to them for several years, and they went up, and I made good profits on it. I just didn't put a lot of money into it. I think I put like 5,000 into it or something. So I ended up, reaping a profit. But again, it was just sort of play money. It wasn't big money or anything like that. Okay, so, but when I read the works of John Bogle, this guy really changed the way I thought about markets. What I learned from John Bogle was, and this guy, he really was the founder of the Vanguard, the index funds. And so, sort of these index funds, his philosophy is, over 95% of professional traders and can't beat the market. They can't beat the standard indexes. They can't beat the S&P 500. They do a lot of trading here and there. They try to time the market, but in the end, like over 95% of them can't beat the market. So what he's saying is, and in the meantime, when you're doing all the things that they're asking you to do, and buying and selling, they're eating up commission. They're eating up your fees. They're charging you fees to do all these trades. And so you get charged a lot of fees. But in the end, over 95% of the time, you can't beat the market anyway. So John Bogle's philosophy is, why try to beat the market? Just ride the market. So what he's saying is, for example, there's like a Vanguard, S&P 500 index fund. So you just buy the fund. You just invest into the S&P 500 index, or a mutual fund that mimics the S&P 500 index fund, and you just write it out. So there's no real, you're buying this and buying that and selling this and selling. There's not a lot of fees. There's not a lot of transactions. So those fees are minimized, and you just ride the market. It's more of a long-term investing strategy. And so that's what he says. But what surprised me was when he said, all of these professional guys who are out there who are doing all these things and telling you and giving you advice, probably like over 95% of them, you would do better just buying and riding the market and riding it out than taking their advice. And in the long run, in 10 years and 15 years, you would have done better doing nothing. And so that really surprised me when I heard that. I thought, really? I mean, you just never know these things. You just think, well, these are professional people. They work at Legg Mason or Fidelity or Charles Schwab or Merrill Lynch or, whatever. And they must know what they're doing, right? I mean, you could go to your local bank, and if you have some money in the bank, they'll say, "Hey, would you like to make an appointment with the investment professional we have over here, the financial advisor?" And they'll try to get you into certain funds, and try to put your money in certain funds and so forth, and they make a commission. But what I learned was most of these people, they don't really, I don't want to say they don't really know what they're talking about, but they're not very successful because they themselves can't even beat the market. Over 95% of the time, they can't even beat the market. And so why am I taking their advice when they can't even beat the market? If I were to just buy, let's say, an S&P 500 index fund and just ride it out for 10 years or 15 years, I would do better than like 95% of the professional financial advisors out there, or stock analysts out there. And so when I learned that, when I heard that, I thought, wow. So why all this flurry of activity? Okay. Now, today I see a lot of people investing in stocks who have really no business investing in stocks. My prediction is almost 100% of the people whom I know around me who are investing in stocks. I say investing. It's not really investing. It's speculating. It's different. If they go at it long enough, they're going to lose their money. Okay. This is my prediction. Okay. Because this is what I've seen. So let me just now just go off on a tangent a little bit and talk about the difference between speculating and investing. Speculators are the people you see around you. They read a little bit about on the internet. They go to some online forums. They maybe read a book or two or 5 or 10, and they think they know about how to trade stocks, and they go into the market and they start trading. And primarily they're looking at prices. They're looking at, all right, what's a good deal? All right. So, and how do they know it's a good deal? They don't. They just heard from somebody that it was probably a good deal. So they're buying a certain stock and they're waiting until it goes up and they're going to sell it. Or if it goes up, they're like, oh, I'm doing well. I was really smart. So they buy more. And then when the prices go down, they get deathly afraid, and then they sell, and then they lose money, and they're on this emotional roller coaster. But if you were to ask these people, hey, why are you buying that stock? What does that stock do? What does that company do? They probably couldn't tell you. If you ask that person, do you know what their balance sheet is like? Do you know how much debt that company has? Do you know how much growth they had? Do you know what kind of industries they're in? Do you know what kind of products they're in? Do you know what kind? They don't really know much about the company at all. They're just speculators. They're just focused more on the price. It's like legalized gambling. I mean, gambling isn't illegal, but it's just like gambling, except you don't go to a casino. They go to the markets instead, and they gamble. It is literally gambling. Okay, so when speculators, when they do this, it's just literally gambling. Now, so that's why I say that's not really what I consider investment. Investors are people who are not focused on the prices, the stock prices. They are focused on the companies behind the stocks. And those people are very, very few. They're rare. And these people have a very different view. They're more long-term. They're buying into and investing into companies. Now, if you do that, but even people who claim to do that, they don't know much about the valuation of companies and how they know if a stock price is lower than it should be or higher than it should be. Or this is not an easy thing. And this is one of the reasons I'm not in the stock market. I mean, I read a lot of books. I've looked into this a lot. I've done it a lot. But I still think that I know so little that I really don't know enough to be successful at it. So I just don't do it. I feel like it's much of it is out of my control. Okay. So I just don't do it. But the real investors, if you look at Peter Lynch, go look up Peter Lynch, YouTube him or Google him, Peter Lynch, Warren Buffett, of course, people like this, highly successful investors. And I love Peter Lynch and some of the very practical advice that he gives. But when you watch some of his videos and you're like, oh yeah, I think I understand. These are the 8 biggest problems that investors make, or these are the top 10 things that people should do. People look at videos like that and they think, oh yeah, I got it. I'm going to go invest now. People don't understand the depth of understanding and knowledge that these people have. When they give you top 8 things or top 10 things like that, that's really scratching the surface of the surface. You got to go so much deeper, and you have to do so much analysis, and you have to know so much more to be successful in this stuff. And people underestimate the amount of time it takes, the amount of knowledge it takes to be successful at it. This is why, even among the professionals, there's one Peter Lynch, there's one Warren Buffett. There's not like 50 Warren Buffetts around here, in the world. There's one. And so that's how difficult it is. So If you think I'm going to make some money in the stock market because everybody's doing it, I'm just going to play around. My personal advice is I probably wouldn't do that. You're going to lose your money. All right. I mean, it's almost a guarantee. It's like you going to the casino. You don't really know how to play any of the games. You're just playing roulette or something. I'm gonna put my money on red, and you just spin it, and they spin it, and you put a lot of money. And the longer you're at the casino, the bigger and bigger and bigger and bigger a chance it is that you're gonna lose all your money. And this is, in my personal experience and observations, this is what I've seen with people. Now, let me just one caveat to this. One disclaimer is, if you're working for a corporation and they have a matching 401k, okay, like my friend, he works for the government, okay, so when he puts in a dollar from his paycheck, I think the federal government puts in another dollar. I think it's $1 to $1, it's something like that. So in that case, I said, well, you should max it out if you can. I mean, if you're going to put in, let's say, $500, the government puts in $500. You already doubled your money right there. I mean, just by doing that, forget about the market rising and and anything like that. So in his case, what he does, he just goes to the least, the least risky, the most conservative fund, and he just puts his money in there. And then he's not trying to be greedy, trying to do something risky so that he gets really high returns. He understands that when he puts his money in and the government puts it in, after your vesting period, you can take that money out later, as a retirement fund. And so you already made the money. As soon as you put the money in, you put $1 in, the government puts $1, they matched it. Where else can you get those kind of returns if you think about it? I mean, so just right there, that is already the return that he sees. And if you're not greedy and you're super conservative and you do it that way, that's very, very low risk. And so I think that was not a bad idea, but in my life, people try to make money fast and easy. I just, there's no real proven method to do that. All right. So I always tell people, I always advise them, look, forget about trying to make money fast and easy. Everything takes time. It takes sacrifice, takes energy. You try to get rich slow. Okay. That's more realistic. And now it is very possible to accumulate a lot of wealth and do very, very well. But all I'm saying, it just probably takes more time than you thought. It probably takes more work than you thought. And remember what John Bogle said, that the vast majority of professionals who go to school, who do this is all they do in their life. Over 95% of them, they can't even beat the market. So if you, not even being one of those people, you think you're going to beat the market, you think you're going to make money in the market somehow long term, it's probably not going to happen. So that's my advice. That's my experience. That's my observation. This is not financial advice, obviously. This is just my personal opinions about it. So, but if you have any questions or comments, you can put it down below, and I'm happy to read them and interact with you. But today I wanted to just focus on that a little bit, about the stock market, what I think about it, because there just seems to be so many people who have no business being in the stock market and investing in the stock market. I'm just worried they're going to lose all their money, but they're doing it anyway. So, So I hope you're not one of those people. But anyway, thanks for watching. This is CK at CK Education. And until my next video, I hope you stay well.